Okay, so let's talk about making money with crude oil this week. Now, if you want to follow along, just so you can kind of see which chart I am using, okay, I am right here in the crude oil futures chart, and I am looking at this crude oil futures with an expiration of September 2024. So if you want to follow along here on TradingView, make sure that you mark up this particular chart. Okay, so I'm going to close up this chart right in here. Let's go ahead and get into the analysis. Now, an interesting point here, I went ahead and put in the 200-day moving average. So keep in mind that we are on the daily chart. Okay, and on Friday, we just barely closed above the 200-day moving average. Okay, so and if you look over to the left, when we historically have closed kind of above these areas, right, there is a possibility with still a lot of volatility in the market that we could begin to see possibly higher prices. Okay. Now, price can do like this, could get very choppy in this area, especially at the beginning of the week. But just note that we did close just above that 200-day moving average with the daily candle on Friday. Okay, so just kind of keep that in the back of your mind. So let's go ahead and hide that moving average as a point of reference. Let's go ahead and remove this arrow here. And then let's go ahead and start setting our floors and our roofs like we normally do. And let's go ahead and keep that same consistency from week to week with our white touch points. Okay, so we can see here we have a bottom of 71 and we have a top here of 83. Now, just for reference, that 83 was hit back on July 5th. Okay. And this floor here was on August 5th. So you can see here that in the last basically month of trading between July 5th and August 5th, we came down pretty rapidly, right? And then we've begun to see this increase here that's begun to happen over the last three trading days. Now, let's go ahead and mark up this top right here because this is a pretty significant top here. We haven't really had a closure above this 78.88. We're just going to round it off to 79 here in a while. Okay, so we kind of venturing up in that particular area right in there. Now, the first thing I want to do on this daily is I do want to add a Fibonacci retracement here. And I want to kind of take a look at where we are within a daily fib level. Again, we like to look at our fibs. We like to stock our entries based on fib levels. And so again, we do know that on the higher time frame, we did just barely close above the 200-day moving average. That doesn't mean it's going to just shoot up from there. We're going to wait to see what price action is doing. But we are in a nice area that we usually can maybe expect some type of rejection in this area. It could be short-lived, but again, we usually do expect to have some type of rejection in that particular area. And I'm going to go ahead and mark this up with white, or I'm sorry, with a yellow box, just so we can kind of distinguish from the fib levels. So that's going to kind of be important moving forward. I'm going to kind of leave these levels up as we go through the various time frames as we drop down in these time frames here. So again, hey, welcome to my channel. I'm the professor, aka also known by real name Armando. Glad to have you here. If this is your first time here, welcome to the channel. Don't forget to subscribe and don't forget to hit that notifications bell so you don't miss out on our weekly videos, and great to have you. If you're a returning subscriber, thank you so much for your loyalty, and I hope that you get some value on this video here. So let's go ahead and jump right back into the analysis here, okay? And as we go through the different time frames, again, you're always more than welcome to pause the video, bring up your chart, whatever platform you might be on. The price action should be similar, and begin to mark up your chart so you have a completed chart by the time you finish this video. So as we drop down now to the 8-hour, we start looking at this price action right in here. And again, my goal for you is to be able to give you the analysis. And if you stick around, we are also going to do natural gas as well by the end of this video. So you're going to have crude oil and you're going to have natural gas analyzed by the end of this video. So we are again going to look to see what happens here. Now, understandably, you have to realize that the market may have a gap when the market opens uh, this evening. So I'm going to kind of mark this area here, and I'm going to kind of label this as the Sunday gap, because it'd be nice if I could spell Sunday gap. Okay, so that means nothing more that is where price closed on Friday. Okay, so even though we're looking at a bigger time frame, doesn't matter what time frame, price closed there on Friday. So if you're watching this video and it's Sunday when the market opens at 6 p.m. Eastern Standard Time, okay, if there's a difference in price, whether up or down, that space, that gap is what we consider the Sunday market gap. And that's something that if it's worth 40, 50 points or higher, we usually look to trade it inside of our trading club. And again, we do that live analysis on Sunday. So that's just wanted to explain the gap for any maybe new viewers that are here. So we're going to kind of wait to see what happens in this particular area. Okay. Because if you kind of squeeze the chart here, okay, and this is why I think it's so important that you do squeeze this chart, you can really begin to see the price action and realize that, we are still in this wave down here. We really haven't changed the trend of this particular wave. In my opinion, to go, back into the 80s, well, we're going to have to definitely close above this level here. Okay. So when you're looking at this 79, we're just going to call it 79, right? If price gets back up there, then we're looking for this type of price action to happen if we're going to go higher. So what I want to do is I want to go ahead and put a call out box here. So you look for this, to go higher. Okay, so you're looking for this type of price action happening where you get a close above, kind of a retest in the area, and then price continues to the upside. Okay, that needs to happen in this area if crude oil is going to go above this $79 price. Okay, so we are here though, so we are not yet looking at that particular level, but I am going to give you this chart so you can just reference what you should be looking for as price moves up. And of course, by the end of this video, I'm going to give you some analysis or some possible entries if price comes down as well. Okay, so we are looking at this Sunday gap from a 8-hour view, and it doesn't really change too much. As you look at this 4-hour view, this is where really we begin to look at the different levels. Okay, so one of the advantages of having Fibonacci levels set on the higher time frame is simply this, is that if you set your Fibonacci correctly on the higher time frame, well, the Fibonacci levels in itself worked as support and resistance for you. So you don't really need to do too much drawing up. Now, if you drop all the way down, for example, to the 30-minute or the 15-minute chart, then you should mark up different levels because every time frame has levels. But if you stay within the daily 8-hour and 4-hour, you're going to usually see that you're pretty consistent. So you don't need to really draw too many other lines, and you can stay within these particular zones within your actual chart. Okay, so now as we're kind of drawing these levels here, and again, just to kind of show you that, you can see here that we've had this rejection here before. Okay, and that's kind of the level that we are at. We've kind of done this teacup effect. Usually after a teacup, we see some form of a handle, sometimes small, sometimes large, and that usually equates to a bullish pattern, meaning once the handle is created, now again, we don't know the size of the handle, then price continues to the upside. So that's what we'll be looking for early in the trading week here as we look at this Sunday gap. Okay, so as I drop down now to the 1-hour time frame, this is where we begin to look for that evidence, okay, where price is going to reject, and we're looking for price action here in this particular case. Now, what I'm going to do is I'm going to go ahead and move this Sunday gap over here a little bit to get it out of the way. I'm going to move this point here because actually that will be the Sunday gap, and you can see it better for where price closed on a 1-hour time frame. Now, a couple things to note right in here. Again, we're in this teacup effect that's kind of happening here. We made this teacup, and then usually we get some type of handle, and then that's usually a bullish pattern to continue to the top side from here, but we are not there yet. And I think that's one of the most critical things that we talk about in our group is that remember that you want to stay focused and you want to trade what you see, right? We all have biases, we all have concerns, we all have, things that we think are going to happen because we read something, but guess what does not lie? Those are the candlesticks. So as much as you want crude oil to go up or you want crude oil to go down for whatever your reasons, price action will always be king, and that's what we focus on when we're inside the group, and you should be focusing on your charts. So we are going to wait for a distinctive move, uh, more so to the bottom side than to the top side, because we are at a fib level right now. So we won't just jump in and buy from here because we know that we have a chance that price could reject this area and then come down somewhat. So we're going to start looking for price action on a downside as we look for the week to open. Now, as we squeeze this out and we look at some of these larger candles, there is still a lot of unmet liquidity in this particular candle right here. Okay, so I'm going to call this a liquidity candle that's not yet fully met. Again, does that mean we're going to come straight up to knock out that liquidity? That could be a gap. Does that mean it's not going to happen this week? We don't know yet, but I just want you to have in your chart that candle is representing some unmet liquidity that they have not yet met. But at the same time, we see the exact same thing down here in these levels. These two candles, okay, have some unmet liquidity candles as well. So we're going to mark those up to keep you humble, to let you know that focus on price action and not necessarily one way or another. Okay, so we do have liquidity candles that have not yet been met. We are sitting at these Fibonacci levels. Okay, right in here. I'm going to squeeze the chart so you can see it from a 1 hour perspective. We are in this area that we typically look for at least our 20 pips a day or 20 ticks a day for some type of reversal. But because it's Sunday, we have to use a lot of caution with regards to where the price may or may not gap. Okay. So now as we kind of expand this, I want to kind of give you a couple of possible scenarios and outcomes. And again, if you stick around, we're going to do a natural gas analysis right at the end of this crude oil video analysis. So what we're looking for here is, number one, is we're going to mark up this particular level right here now. Okay, because if we do get price to close above this 77.28, we're just going to call it 77.30. Okay, then we are looking for price to come up to this area and eventually take out the liquidity of this candle. So we're going to basically trade zone to zone. Okay, so if we do close above this 77.32, then you are pretty good to take this all the way up to 78. Okay, that would be that particular scenario. If we reject this scenario here and we get price to kind of close below this yellow box area here, and we're just going to call it 76.75, then at that point we are, and again, this will happen on a smaller time frame, we are looking to take this back down to this particular level, which is about 76.15. Okay, so just some intraday perspectives as you begin the week. And again, one of the advantages of being inside of our trading group is that we analyze this daily, twice a day, with updated charts. So that is a huge advantage for you day traders who can get real-time information on the spot as it's happening. So those are really the two scenarios. We're either going to have that one scenario there, or if we close above this area here, okay, and I'm going to go ahead and remove this yellow box for a minute, okay, then you are looking to take price up to this liquidity zone. So those are kind of the two rules there. You can kind of tell yourself here, we're about to form these three candles here, okay, and there's the break, okay, and I'm going to make this red because if we get the break of this red area, then we're going right back down. Okay, we're going back down. So that's kind of the early week viewpoint with crude oil. There's no distinct we're going to go up. There's no distinct we're going to go down. Again, there's going to be a lot of geopolitical news that's happening with crude oil. It's going to be volatile. So again, our suggestion is always that you use a lot of caution trading crude oil. If you're on the future side, like I am as well, nothing wrong with trading the micros as well with crude oil. If you're trading it on the CFDs, again, using smaller lot sizing because of the volatility will allow you to swing some of these trades if you get caught in the wrong direction. If you throw your whole account at it and you're wrong, then you're in trouble. And again, one of the things that we focus on is if your risk, for example, is 2% on a particular trade, then what you want to do is you want to go ahead and divide that trade into two entries, one entry at 1%, one entry at 1%. So now you're still risking the exact same 2%, but you're dividing your trade into two different entries. Why? Because if price moves in your direction initially, our goal is that we secure at least 20 pips or 20 ticks in that growth account in our 20 pip challenge that we are doing. Secondly, is you can then protect that second trade. And if it reverses on you, no harm, no foul. You got your 20, you secured some profits because you have to secure profits if you're going to grow any size account. And then you break even or you just make 1 or 2 pips or ticks on the second one. But if the second one turns into a runner, you can now trail that one. And so now you've secured 20 and now you're running on the second one. And it's just a little bit easier to reduce your risk because now you're only still on that original 1% risk on the second entry, and you can just then trail your trade when it comes to that. And so even if you make an extra 1.25, 1.5, you reduce your liability, you reduce your risk by having that second entry just being 1% and just only managing that one because you've already secured 20. Okay, so hopefully that helps you out with a little bit of risk management and how to actually make more money with two entries and still reducing your initial risk into two entries, because the goal here is that you can take a runner or that you can swing that second position, but you've already secured profits on that first 1% in the example that I gave you. So what I want to do now is I want to go ahead and jump into our natural gas analysis. Okay, so we are jumping into our natural gas analysis. And again, if you want to follow along and you want to see which chart I am using, it is right here, NGU 2024, under the futures section on Trading View. And again, you can see here that we are using the September 2024 chart for the contract expiration. Okay, so we are here on a daily time frame. Okay, so what we want to do is we want to go ahead and just like we do with crude oil, I mark everything up consistent. So it's always consistent across the board. Now we want to go ahead and mark up this particular high right in here. And for natural gas, I kind of keep the analysis very, very basic because we know natural gas can really move very quickly. And so me, for example, I'm more of a scalper. I don't swing trade natural gas. I kind of like to stay within a particular area because this is one that can really get you in trouble. So we can see here that we had this high of 2.29 kind of back on July 22nd, not too long ago. And then we hit this floor here back last week on Monday on August 5th. And if you can see right here, we kind of closed the day on Friday with this doji candle created right in here. So let's begin to look at the same type of analysis like we do for crude oil. We want to look at this Fibonacci perspective and kind of see where we are at right in here. Okay, so we're going to go ahead and move this chart up a little bit so you can have a nice clean view of it. And we can kind of see here that over the course of Friday and over the course of Thursday, and again, heading back into last Thursday, this here has kind of acted as somewhat as a level. I'm going to make this yellow so it stands out. This has been kind of a roof here, meaning we really have not seen price close above the 2.19 level since July 24th. Okay, we saw some rejection on Friday. And so what does this mean? Well, I can tell you that natural gas will usually have a huge gap on Sundays. They are very well known for their gaps on Sunday, and we'll talk more about that as we kind of move through the price action. So here we are on an 8-hour level. And again, we are going to be focusing in on price action. We're going to be focusing on Fibonacci levels, and then we'll give you some possible entries based on what price does in just a few minutes here. So we can see here that with this 8-hour candle, okay, price came down and took about 50% liquidity of this candle and then began to rise from there. At the same time, it kind of came to the to the support level of this Fibonacci level. We talked about it just a few minutes ago in the crude oil analysis, how a Fibonacci on a higher time frame, especially like the daily, will also serve as support and resistance, okay, for the 8 hour and the 4 hour for the most part. As you drop further down, then you should create newer levels because every time frame will have levels. So now, as we're looking at price action here, it is going to be early on where we have to analyze this, but we have to understand that on Sunday, there is going to be a gap created here. I'm going to mark this over here. And again, you have to look at this Sunday gap. Now, with natural gas, this acts a little bit more like a beast. You really have to be careful. Natural gas, and I want you to hear me on this one, natural gas still has gaps open from January of 2023, way, way up there. So, natural gas is one of these kind of symbols that, unlike the other ones that have over a 90% success rate of closing gaps within a week, natural gas can stay open for months or even, as you can see, for over a year. So if you are going to trade the gap, be very, very careful. Try to make sure that you have the price action moving in your direction. And I'm going to give you some of that here by the end of this video. So we are now looking at this on an 8 hour level. Okay. So on a big level, right? For those of you that might be sitting, well, I need, I'm caught in a buy from this area up here. Well, we're not going to move higher. Okay, let me grab my square. We're not going to move higher on natural gas until we close above this 2.30 area. Okay, so we are still in a pretty massive downtrend. Right? I don't need to show you that. I can just put a trend line and show you that we are still in this particular downtrend. So the safer play for natural gas is still going to be to sell natural gas versus trying to buy natural gas. Now, when will that change? Well, right here. If you go over and you squeeze the chart to where I put that yellow line, you can see that here, when we closed above, right, we made a run to the top side. And then we came back down to this level and we made a kind of a run to the top side. And then we came back down to this level, close to it. And then we made a massive run to the top side, right? So this level here, as we're looking at it, as we are approaching, is going to be a very important level to determine whether natural gas is going to want the inclination to move above 2.30, or are we going to stay coming back up, rejecting, and then coming back down to lower levels. So this is going to be a very important key level at this 2.30 if and when price approaches that particular area. So let's jump over to the 4 hour. Again, we can see the price action here. We have our fib levels that we set on a daily time frame. And again, you can see here that this is a rejection point. So we are going to wait on a smaller scale, this particular area right here. And we're going to go ahead and change that color. Let's just go to our little bit darker purple here, because that is going to be an area. Then I'm going to move this gap over here. That is going to be an area that unless we close above, okay, and I'm going to give you the scenario to look for, right? You're looking for on a big time frame. Now, when it comes to natural gas, I am not looking at a smaller time frame. I need a bigger time frame candle to close, because there's a lot of false alerts, if you will, on the smaller time frame. So what am I looking for? I'm looking for, let me get a call out box again. I'm looking for this type of action. So you see this green candle right here? Okay. Okay. You are looking for this to go higher. Okay. So you're looking for that type of price action, okay, where you get this candle, this 4 hour candle to close above to go up to the next level. So you would need to see that here. Same scenario here. You would need to see that here. And I'm going to make this green to keep it consistent, right? You would need to look for that here, just like it did over here. So you could kind of expect this to happen here. If this happens here, then we're running up to at least 2.25. And then if we break 2.25, we're heading up to 2.30. And again, that's going to take some time. And again, we'll be evaluating this inside of our private members area as it's happening. So that's what you're looking for. Now, on a smaller scale, okay, on a smaller scale on this 4 hour, again, not barring any Sunday gap, if we're looking at this high to low here, right, we are in an area that we normally would expect some type of Fibonacci resistance and for price to go down. Okay, so I'm going to remove these fibs, and just to make it easier for you, okay, if you get price to close below this level now, I'm going to make this red, then you can expect, okay, that we are going to come right back down to our next level. Okay, natural gas is not hard to trade if you don't over lot size and if you trade level to level. So you are looking for one of these two scenarios to play out. We do nothing right now in this area. This is a very dangerous area. We do nothing because it is uncertain what price is going to do. So you are either going to wait for a break and close to the top side or a break and close to the bottom side, and you are going to trade this level by level. Okay, because outside of that, natural gas could be very tricky. And if you look right over here to the left, let me get rid of this line here I just made. And if you look over here to the left, you can see that you can end up having consolidation when this level for a while. And this is very, very difficult to trade. But once you get that closure, you can see what happened here. Price closed and almost hit the level, basically. But it came back up to retest and then dropped to the next level, just like here. So you're kind of looking for this scenario to the bottom side. So let's go ahead and tag this, right? So you are looking for this for the sell. Okay, you're looking for that type of price action to the bottom side. So now I've given you what to look for the top side over here, and I've given you a closure that will look like this, that would kind of mirror this over here on this particular candle, what you're looking for on this particular side. Okay, so that's the only way we will look at natural gas. We will look at it from a structural standpoint on a higher time frame, 4 hours, going above or going below, nothing in between the zone, because as you can see, it could be very, very choppy. Okay, so I hope you got some value on today's video. We analyzed crude oil at the beginning. We gave you some natural gas on the back end. And again, if you are brand new here, welcome. Hopefully you'll find a home here. We got some exciting things coming up on this channel. And so again, if you're brand new, definitely hit that subscribe button, hit that notifications bell, hit the like button, all of you. I would greatly appreciate that as well. And if you're in the club, don't worry, sit back, worry free. I'm going to post all these charts here shortly inside of the members area. Have a great Sunday. If you're watching this video on a Sunday, if it's any other day of the week, have a great day. Have a great week. Remember that trading does not have to be hard, but trading by yourself is very, very hard. So if you join a positive community with positive members, they can definitely help you expedite your learning curve. At the same time, they can encourage you when you have those bad days versus trying to deal with that by yourself and then letting greed and other factors basically impact your trading psychology. So we hope to see you in the club, but if not, you can definitely stay here absolutely for free, and we welcome you there as well. Okay, have a great trading week. Stay blessed. Do something nice for someone. Be kind, because our world needs more kind people in it today more than ever before. Thanks for watching.